All right, what's up, guys? Let me share my screen real quick here. Let's see if we can catch any rejection scalps. So so this, if it does happen, it's probably gonna happen really quickly, but let's see if we get any entries. Again, I think I'll start focusing on rejection scalps for US 30, and I will be going for a 1:5 risk to reward. Uh, Let me change my break-even settings. So for you guys, you can go for 1:1. I still have a high win rate with that, or even a 1:2 risk to reward if we do get it. And mostly like yesterday's rejection scalp on market open could have hit a 1:5 easily, like almost instantly. So it's not going to happen every day. So the thing with going for 1:5 risk to reward, especially if you're not taking partials, is that um give me one moment. Especially if you're not taking any partials, is that this is a US 30 trade I'm following, but especially if you're not taking any partials, is that you can hit stop loss maybe 3 times before you get that 1:5 risk to reward. So for you guys, maybe consider going for 1:2 or something. But again, if you still want to do 1:5 like me, well and good. Because for me, if I do hit 1:5, so for example, like if we had the live session yesterday and we went for a 1:5 with my 0.75% risk per trade, I would have made 3 point, what is it? I would have made almost 3.75% just yesterday alone on US 30. But okay, so here's a rejection scalp entry right here. So we need price to get to 10 points. Yeah, so it's already gotten to the 10-point marker. And we already know we are in a green zone here. We do have this bearish order block, but mostly also in my experience is that I've noticed these 15-minute entries are the ones that give us that 1:5. So here, 20-point stop loss, 100-point TP. Just wait for the crossover sell, crossover buy. So I'm waiting for that. Shoot. Wait. 3. I hadn't set it up. Come on. Okay. So we need that green X. I think it's gonna come on this candle. There it is. So there's the entry for US 30. So it's already reached I hadn't turned on my auto trading. But that's the trade for 1:5 risk to reward. So this trade, you've already achieved a 1:1. You've already achieved a 1:1 risk to reward because remember, 1:1 would be 20 points TP. So this trade should be at break even right now. So if you had it at break even, you're out at break even. If you had it for 1:1 risk to reward, you'd have already hit TP. But that's how we do these trades. So you can see that rejection right there. Unfortunately, I forgot to turn on my auto trading, so I missed out on that trade. But even if I had taken it, this trade would have ended up at break even. So anybody who took a 1:2 risk to reward, I'm sorry, 1:1 risk to reward, actually even 1:2 risk to reward, you would have already hit that. Yep, you'd have already, no, you'd have hit 1:1 risk to reward. But this is the idea. So sometimes the trade will come back and hit break even. Sometimes it won't. So today is that example where the trade would have come back to hit break even. The other thing you can do as well is that you can, and this is a risk as well. So remember the threshold is 10 points away from the rejection area. So you can always set your pending order, but you'd have to do it so quickly, especially during market open when some of these trades, so 743, 733, right? So you could have set a pending order 10 points away. Or when you achieve, or when I say we've already hit the 10-point marker, you can decide to enter your trade there. You can decide to execute in the market like exactly there. So for example, this one, you would have been on your way. Your entry would have been at 41,733. 41,733 right here. And this one, you'd have hit your 10 points. Yep. Because for this particular one, so if you would have entered at 41,733, which would have been right here, right? You see the beauty of this rejection scalps. So if you'd have entered there with a 20-point stop loss and a 100-point TP, you would have hit your 1:5 risk to reward there. The only issue with entering immediately when that 10-point marker has been hit is that, let me make sure I don't want to miss any other entry. The issue with entering it there is that price can keep going down, right? So it's a matter of probabilities. So what is the probability that price won't keep going against you? So sometimes you don't have to get this rejection, right? But the idea of this rejection scalps is that the candle does exactly what it did today, reaches that level of rejection, and then swings back up. That is the whole gist of the rejection scalp, is that you're trading that candle. Now, for me personally, I prefer waiting for that confirmation, right? And my confirmation is that crossover buy or crossover sell signal. For somebody who say, I think still, if you just enter on the 10-point marker, you also have a good enough probability for price to go up. The other option is to wait for price to come back to your rejection area and enter that area. So maybe set a pending order when price is already below your marker. But for me, I've found I have more success waiting for this crossover. So unfortunately, so today price would have came back to break even either way. So I will go ahead and update this. So far today is a break even day, as much as I missed that trade as well. So last month, I really haven't done a lot of live sessions this year. So last month we had a gain of about 0.75, February 0%. So last month is when I decided to start going for this rejection scalps as official trades. But again, as we revisit this 15-minute rejection areas that come up during market open, those are the ones that I've found give you a 1:5 risk to reward. Because what happens is that price will reject from that area and then go back to the next zone, which is somewhere above here. So some of these zones before then coming back down. So we'll just have to, at this point, we'll just have to wait for the next, for the other trade. There's some days I've found like 5 back-to-back rejection scalps at market open. Yeah, like back-to-back rejection scalps at market open. Hopefully we get some of those today. For gold, I think I'll stop. I won't be doing rejection scalps for gold. I can mark it up for you guys, but the reason I'm not doing rejection scalps for gold is that, let's see. So if we do, and this is my trading journal, right? So if I go ahead and filter this by rejection scalp, you'll see that since I started doing the rejection scalps, it's made me about 14,800, right? With a 58% win rate, 29 wins, 21 losses, right? So that is between gold and US 30. I really haven't done it for BTC. And actually, I stopped trading Bitcoin as well, even with my other strategies. Now, if I go to the same filter and apply the filter for gold, you will see that gold has so far I have a loss of 2,500 with a 47% win rate with 8 wins, 9 losses. So for gold, I have right pretty much the same number of wins and losses. But if I change this to um, if I change this to US 30, so I take out gold and I do US 30. US 30 alone has a $17,000 return, 63% win rate, 21 wins, 12 losses, right? So that's I almost have twice the amount of wins than I have for losses. So at this point, with those statistics, it doesn't make sense for me to keep trading gold for the rejection scalps. The idea with the rejection scalps is that you want liquidity in the market. So for gold, for example, even when I used to do 1:1 risk to reward, I was going for $2 stop loss, $2 TP. And I was still having equal amounts of losses as wins. That's because gold is not going to go strongly in one direction unless there's heavy news. And if I want to start even doing 1:5 risk to reward for gold, I feel like my win rate will dip. Because even right now for US 30, if I start going for 1:5, this win rate will dip right here to maybe 40 or 30%. For gold, if my win rate is already 40% and I'm in break even or loss, and I start going for 1:5 and that win rate dips, I'll even have more losses. And just to give you guys an idea here, um, in this trading journal here that I use called Edgewonk, if we go to the strategy lab, it has an option for you to simulate your strategy. So for example, right now I've already selected US 30 for the rejection scalps. And if we start simulation here, you can see that this has a general uptrend. Regardless if I regenerate the simulation, right? The uptrend is always so high, right? Right there. But if, for example, here I do a average gain of $10,000, which is what I'll stand to gain if I go for 1:5 risk to reward. And again, I just want to make sure we don't miss any rejection scalp. Um, if I change this to average gain of $10,000, which is what I'll stand to make with a 1:5 risk to reward, my win rate will drop from maybe 63. So let's even drop it to 30%, right? And then we start simulation. You can see the simulation is still to the upside for US 30, right? So you can see the simulation is still to the upside, upwards of $1 million from a 200K account. And let's drop this further down to 20% win rate. Because again, here I do expect my win rate to go to the downside because in some instances I will hit break even. In some instances, I'll have some losers before I gain some winners. So you can see for a 20%, I really don't want to get to a 20% win rate. So probably I want to keep it somewhere at 25%. So with a 25% win rate, I still have heavy upside for this particular one. Now, if we go back to here and then change the filter and go to gold here and do the same simulation, nothing yet for a rejection scalp, and do the same simulation. And let's do this. You'll see for gold, it's trending to the downside. So if I keep trading gold, I'll still be between break even and ideally losing. So the graph is trending to the downside. And even let's assume that let's put this back to, yeah. So let's put this back to 10,000 with a win rate of 25%, right? So with gold, win rate of about 20%, my chart can start trending to the upside. But so right now, my focus on the rejection scalps will be on US 30 alone. So let's see if we get another rejection scalp here. So as price dips to one direction or the other, we are bound to get a rejection level. So that is what we are aiming for here. So let's see if we get a rejection level here. So it doesn't look like US 30 will push back to the upside from now. So remember, this rejection levels and mostly the 15-minute rejection levels, those are the rejection levels that give you you know, give you a reversal, because for this rejection scalps or this SAR rejection levels, they are pretty much reversal patterns. Okay. And so far with the SAR rejection levels, we don't have any entry from yesterday on the hourly time frame. There was an entry on the 4-hour time frame here, so this is the trade that I'm following. I did not take this trade because this is a actually I was off the charts when this trade came in. So this trade came in at 5 p.m. Eastern time yesterday. So I was off the charts. I'd already wrapped up for the day. But on the other hand, for this particular trade, we had a weekly bullish low here. We had this 4 hour bullish high, 4 hour bullish low here, and this is in the direction of our take profit. So what this is bound to give you is a lot of ranging, because if you have an opposing order block in the direction of either your stop loss or take profit, you expect some opposing kind of price action. And also, on the other hand, here for this particular trade, you would have needed a 400-point TP and stop loss for this trade. So for US 30, my maximum TP and stop loss that I like is 300 points. So I really don't start like I really don't like to start going for the 400 point TP and stop loss. So that's another reason why I also chose to stay out of this one. On the daily time frame, there was this US 30 trade that I was following since last week. Again, I didn't take this one because this one you'd have needed 1,000 point TP and stop loss, which again is pretty wide for US 30. Um, so here, really hoping we get something. And it's like the days I do the live sessions are the days that we don't get this rejection scalps. But I'll stay on today. I think I'll stay until like 10:30. So for this rejection scalps, again, I normally try and catch them between market open 9:30 a.m. to 9:30 a.m. to 11 a.m. Eastern time, and also 1:30 p.m. to 3 p.m. Eastern time. So the afternoon session, the afternoon trading session. So that's normally when I try to catch those rejection scalps. Let's see for the other chart where we have the trend line and SAR rejections, if there's anything as well, but I really don't see much on there. Let's see. And I think also we have FOMC, no, not FOMC, NFP on Friday, right? Because it's the first Friday of the month. Yeah. So during NFP, you can also take these rejection scalps during heavy news events. So CPI, NFP. So I'll be looking to take NFP trades on Friday. And again, like what happened this morning is um actually let me do this in the meantime as I look at this. So I will share this page where I was doing some statistics for the rejection scalps. So I have shared like a notepad. So these are my US 30 and gold results for the month of March. So you can see US 30 gave me for the month of March, I had 14 wins. Gold, I had 3 wins for the month of March. So for this particular one, when I was taking the statistics, I was considering because when we started the month of March, I did mention that I was taking statistics to understand whether I wanted to switch to a 1:2 risk to reward compared to a 1:1 risk to reward. So what I did here is that for every win that I took it for all these trades here, I took them with a 1:1 risk to reward. But in the middle, where I have into parentheses here, I put in a comment whether the trade would have achieved a 1:2 risk to reward if I had taken a 1:2 risk to reward. And then on the last column here, I just recorded what I made for that trade vis-a-vis what I would have made if I was going for a 1:2 with break even set at 1:1 risk to reward. So for example, on March 7th, I had a US 30 win. This trade would have achieved a 1:2, but I took it with, I made $2,000, but I could have made $4,000 if I took it with a 1:2 risk to reward. For March 11th and March 14th, these trades, I took them with a 1:1 risk to reward. I made $2,000 each on those trades. But if I was taking them with a 1:2 risk to reward with break even set at 1:2, those trades would have hit break even, meaning I would have made $0 if I chose to do that. Now, with that logic, I ended up making, so this is 14,000 times 2. The wins for March or beginning March 7th were $28,000 for US 30. So that's what I made with a 1:1 risk to reward. If I had chosen to do 1:2 risk to reward, I would have had 1, 2, 3, 4, 5, 6, 7, 8. 8 times 4, so 8 wins. 1:2 times 4, 32,000. So with 1:1 risk to reward, I made 28,000 worth of wins. With 1:2 risk to reward, I would have made $32,000 worth of wins. So 1:2 risk to reward is also good for you guys to consider. It gives you a slightly better edge. So you guys, like for example, today actually would have been a break-even day, but if you had taken 1:1, you'd have won today. Now for these trades, unfortunately, I started seeing the 1:5 risk to reward pattern, I think the last week of March, but at the very least, there were 4 trades here that would have gone to 1:5 risk to reward. So just for those, and it's at least 4. It could have been more, but again, it's just at least 4. So considering 4 trades could have gone to 1:5 risk to reward here, for US 30 alone, I would have made 10,000 times 4, $40,000, if that makes sense. And those are the 4 that I know of, right? So for example, this one for yesterday, this first win, in the morning yesterday, and I did send this in the Discord, the results after, because unfortunately I wouldn't be able to send these trades in the Discord because I enter on the 5-second time frame and they happen so fast. But this one for yesterday did hit 1:5 risk to reward without coming back to break even. And then there was a couple, but at least 4 of them in the month of March could have gone to 1:5 risk to reward without coming back to break even, which is to mean that I would have had $40,000 worth of wins. And let's assume maybe 8 or 6 out of the 14 wins could have hit 1:5 risk to reward. That's $60,000 there. So that's even double going for a 1:2 risk to reward. So that's another reason why from right now, right, my goal is to go for 1:5 risk to reward. Now, the month, right, it doesn't have to happen that way going forward, but you can just see the idea that I had 14 wins in March. So let's say I have 14 wins in March, and maybe 30% of them had a 1:5 risk to reward. So even though this particular month I have maybe 10 wins, and again, still maybe 30% of them go to 1:5 risk to reward. That's $30,000 right there on US 30 alone. For gold, you can see gold only had 3 wins in March. So 3 wins. And 2 of those wins, if I had gone for 1:2 risk to reward, I would have ended up at break even. So again, this is another reason why I'm not going to be taking, I don't think I will, we'll see. But this is another reason why I'll probably not be taking gold rejection scalps, unless maybe I start going for $1 TP, $1 stop loss, which is pretty tight for gold. So I don't even think I want that. But I wanted to show you guys these statistics just to give you guys an idea of what I'll be doing going forward. And for this particular trades, honestly, if you choose to go for a 1:5 risk to reward, and I will also be looking to take a, a challenge with this particular one for US 30 alone, because even though you choose not to go for a 1:5 risk to reward like I do, you can see here, this is $28,000 right here. So I just showed you guys if we go back, and I'll go back to the trading journal, even though you just take the rejection scalps with me, or you learn how to take them, this right here, and you just go for 1:1 risk to reward or 1:2 risk to reward, there's no reason why you couldn't, be hitting at least $10,000 and this is on a 200K account, 200K prop firm account. There's no reason why you can't hit $10,000 a month with the rejection scalps. So the idea is, you just have that in your mind and you just focus on the rejection scalps. Or if you're like me, you start going for 1:5 risk to reward, and then you just wait for those 3 out of 10 times where that 1:5 risk to reward is going to hit. And as I've shown you guys in my trading journal with the simulation, even with a 30% win rate and you go for 1:5 risk to reward right here, with a 200K account, you can compound that over to $700,000, $800,000, or even $1 million. So anyway, so this is why I love taking statistics for every trade that I take, because this also informs my vision going forward on how do I improve a strategy I have, how do I change something up. So yeah, so I'll just go back to the to this chart right here. Unfortunately, today, again, right, almost every time I choose to do a live session, we barely have any rejection scalps. So right now, I don't see any other rejection scalp. Yeah, but we can go back in here and if we go back in here in the trading journal. So again, right, for me, my focus is I want you guys to focus on this. For US 30, right, 58% win rate, 29 wins, 21 losses. Wait, no, 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 no. No, no, no. It hasn't. Give me one moment. It hasn't updated. US 30 should be. There it is. Yeah. So US 30, 21 wins, 21 wins, 12 losses. So almost double the amount, $17,000. And this is in a span of 2 months, right there. So that's the idea I want to give to you guys. Compared with gold, I really don't. This is another, right? If we go back to gold again, this is another reason why I really do not encourage, or probably don't encourage you guys to go for the rejection scalps for gold, even with a 47% win rate, right? I'm at break even, 8 wins, 9 losses. So there's really nothing. So would rather focus the energies on US 30, the one that's giving better entries. Now with the rejection scalps as well, there's another variation to the rejection scalps. So currently the rejection scalps are based off of this SAR rejection levels. The other thing too I've noticed, you can take the rejection scalp based off of the EMAs. So currently, personally, I use the 9 EMA and the 12 EMA. So I'll just go ahead and turn off this indicators, the other indicators. So for example, let's look at what happened here. So you see when US 30 got to the 200 EMA, and it actually hit that 10 point. So remember, for US 30, you want price to go past your rejection level by 10 points. For gold, you want it to go past your rejection level by $1. So look at what happened here when US 30 got to the 200 EMA and went past it by those 10 points or so. You see that rejection back down to the downside. And if we turn on our zones indicator, now for this particular one, for the zones, we did not have a sell zone here. So for this particular one, I would not, let's see if we replay this. For this particular one, I would not have taken it because we were not in a sell zone. But the idea is that you can also take these rejection scalps based off of a rejection off of an EMA. So for example, here, the height of this candle was 41,870. So if we go to 41,870 here on the 5-second time frame, which is where we would have put or which is where personally I would have entered. And, let's assume we are going for a 1:5 risk to reward again. Let's do that, right? So this trade would be currently at 1:5, 1:4, 1:3, 1:4 risk to reward. So you can also take those, rejection scalps based off of a rejection of a moving average. So for me personally, I like the 9 EMA, the 200 EMA, and I've also noticed that. So maybe that's another variation I can add to the rejection scalps, maybe, because I'm looking for something else to replace gold with. I'm thinking of NASDAQ, NAS 100. I have never, the last time I traded NASDAQ was maybe 3 or 4 years ago when I first started trading. But let's see what NASDAQ has today, if there was any entry. So NAS 100 US. So NASDAQ kind of moves almost similar to US 30. So it looks like there was an entry on NASDAQ on market open. So if we go ahead and replay this, and I'm still watching for US 30. I still think we're going to get a US 30 rejection scalp, but let's see what happened here for NASDAQ during market open. And just be on the lookout here for US 30. I feel like we'll get another rejection scalp. Okay, so for NASDAQ here, we had this rejection right here, but it happened in no man's land, right? So remember, similar to the other regular SAR strategy, you want to sell only if price is in a red zone. You want to buy when price is in a green zone. But you can see here, there was this rejection from this 15-minute level here. So NASDAQ, the same thing, right? You would wait for a 10-point pass from that rejection level, and then you go to the 5-second time frame, and then you enter. So it looks like NASDAQ as well. Maybe NASDAQ is something we can look at to replace gold for the rejection scalps. But so NASDAQ is pretty much the same thing, right? If you guys can see here, but this happened before market open. So this would have been a rejection scalp here for NASDAQ because price, again, this SAR levels, it doesn't matter what instrument you're trading. They pretty much move the same way. So NASDAQ here you'd have waited price to go against you or against the rejection level by 10 points, and then you wait for price to come back. So this is what I'm telling for you guys. You can either, when price gets to that 10 point, it is a risk in my opinion, but the anticipation is that the candle, this is the whole premise of the rejection SAR rejection strategy or the rejection scalp strategy. The essence of it is that your anticipation is that the candle will close like how this candle closed here. Your anticipation is that your candle will close above or below an SAR level. That is it. So with the regular SAR strategy, we normally wait for that first candle to close to give us confirmation, and then we set a pending order there, and then we wait for price to come back and tap us in and go up in our direction. But for the rejection scalp strategy, the only variation between the SAR rejection level strategy and SAR rejection scalp strategy is that with the rejection scalps, you are actually trading the rejection candle right there. So you're actually trading the rejection candle. While with the SAR rejection levels, you wait for the rejection candle to give you confirmation. You want to make sure that it closes above or below, and then you set your pending order at the rejection level. With the rejection scalp, you're kind of looking into the future and anticipating that the rejection candle will give you that closure above the SAR. But for example, this one with, if you're trading NASDAQ here earlier, and again, I don't recommend you to trade before market open, but if you're trading it with this one and you go for um, 20 points, 20 points stop loss, 100 points TP for this particular one. I don't know if this one, again, I don't know where the entry would have been, but if the entry would have been maybe somewhere around here or somewhere here, it doesn't look like this trade would have come back and hit break even. So for this particular one, if you're risking $2,000, like for example, for me on a 200K account, that's $10,000 right there. If you're risking $500, that's $2,500 right there. So that's the whole essence of it. So I'll do some back testing with NASDAQ and see if it's a good candidate for for this one, for the rejection scalps, but right now let's just focus on US 30 and just at the very least nail that down. If you guys have any questions, feel free to ask. I'm hoping we get a rejection scalp sometime here during this session, but I'm not sure we'll get one. Again, this is an example of an SAR rejection level on the 4-hour time frame that happened yesterday. Reason I didn't take this, it has a 400 point TP and stop loss for US 30. 400 points is pretty high. I don't like going above 300 points for US 30. But this is an example of a SAR levels rejection on the 4-hour time frame. If we get a rejection level here, this would be perfect because you can see here we have a bullish order block. So this would be a nice area to get a rejection scalp. And actually, now that I remember, you can also take these rejection scalps at this order block levels. So for example, here, let's try and follow this. So the essence, again, here's the other essence of the rejection scalp that you also need to remember is that whether you're using an SAR level, whether you choose to use the EMA, whether you choose to whether you choose to use the order blocks, is that if price gets to that level, whether it's a rejection level, whether it's a SAR rejection level, whether I'm sorry, whether it's a order block or whether it's a EMA, if price gets to that level and gives you a rejection that's equal to half of your take profit, for example, US 30 is $20, no, 20 points TP and stop loss. So for example, here, and we'll see what happens here. So for example, here, if price touches this order block and goes up, mm, two, three. Okay, so it didn't happen there, right? So here we've already gotten the 10-point marker here. So here, and again, this won't, let's follow this. I won't take this as an official trade, but let's make sure we're in a green zone. Perfect. So our expectation here is that price will swing back up and close above this order block, right? So, uh, yeah. And this is the 200 DMA rejection. So you see here, we could have hit a 1:5 risk to reward. So let's try the same with, so you can take this if you want. Personally, I won't take it. But again, since we are testing this, because personally, I'm only taking SAR rejection levels. So the entry would have been here. Going for a 1:5. Again, I'm not taking this trade. I'm just testing it out. Personally, I'm only taking the SAR rejection levels. And if you want, you can go for a 1:2. And again, remember, for somebody who took it 10 points down there and 10 points, so this one again would have, so this particular one would have been taken out at stop loss. But for someone here who took it at same thing here. So remember when I was telling you guys with the 10-point marker, if you choose to take it at the 10-point marker and just take it by impulse, this one as well, you'd have gotten taken out, right? If you went for 1:5 on this, and again, this is just going for the order block entry, which personally I do not because I haven't back tested it. So for this one as well, you would have gotten stopped out as well. And if you waited for a confirmation that crossover on the 5-second time frame, again, this one you'd have gotten stopped out. But let's assume let's assume you had taken the EMA rejection scalp. which you would have hit a 1:5 risk to reward without price coming back to break even. And let's assume here you took this one with a 200K account, risking 1% per trade. Personally, I always normally I just risk 1% per trade because I take fewer trades during the day and during the week. So let's assume I'd taken this with 1% on my 200K account. This particular trade, I would have made, say, 10K, right? And then let's say I took this trade as well and I lose this trade. This trade, I would have lost 2 grand. So again, I would still be up for the day, 8,000 bucks. So that's another thing with to master for the rejection. I'm sorry, not for the rejection scalps. To master for the risk to reward. You don't want to have a negative risk to reward. At the very least, you want to have a positive risk to reward. So at the very least, you want to have a 1:1 risk to reward. If you can, the higher the risk to reward, the better. But you want to get to you want to backtest your strategy and see how often do you get high risk to reward. So for example, for me, for the 1:5 risk to reward that I'll start doing, I've already back test actually forward tested during the previous month, and I know that US 30 every so often with this rejection scalps goes for or hits that 1:5 risk to reward. But currently for me, I will stick to the rejection scalps of the SAR levels alone. I'm not going to be going for the EMAs just as of yet until I master the rejection scalp for the rejection levels. I'm not going to go for the order blocks just as of yet, again, until I master. So for example, right now, if we do get, so the nearest rejection scalps, or I'm sorry, the nearest rejection levels for US 30, the nearest rejection levels for US 30 currently are all the way down here. So if price gets here, then I'll be looking to take them. But or unless we get another one in between these areas. Gold currently is in a range. So here we do have these levels on gold right here, the 15-minute and hourly rejection areas. I don't know if price is going to get there before the live session is over, but let's see. So what I'll do, I'll create an alert for gold at 120. So 10 points, I'm sorry, $1 away from this level is here. So I will create an alert for gold at this level so that if it reaches there when we're on the live session, we can take it. Not we can take it. We can mark it up. Since it's a new month, I really don't want to have to take gold entries again and then discontinue them during the month. All right, for gold, I honestly, even though I would continue trading gold, or even though I was to continue trading gold, I don't think I would go for a 1:5 risk to reward, because the amount of times gold is going to go for that 1:5, I really do not see it. I haven't seen it a lot of times. So, but this is the kind of move you'd be looking at for gold if you're going for 1:5 risk to reward. So I think best for gold to just maybe stick to 1:2. So let's see for US 30 if we get to this rejection areas, and then hopefully that will be our 1:5 entry for US 30 for today. So everything looks good for this trade. We're in a green zone. We don't have any opposing order blocks. So what we are looking for here is, and if you have two areas like this, two SAR rejection levels like this, you just go ahead and take the most optimal one. So this one is at 41,453. So my alert will be at 41,443 right there. So I will create an alert for US 30 there, and then I'll be looking to do this. So here's a big question for you guys, right? So we've already talked about the 3 ways you can choose to enter this trade. So you can either set a pending buy order on US 30 for 41,443, and here's the gold one as well. For 41,443, Okay, so gold has reached the buy area, that rejection area. So anybody who wants to take a trade on gold, I will mark it up for you, but I won't be taking trades for gold. So we go to the 5-second time frame. So on the 5-second time frame, what we are anticipating here for gold is a crossover buy. So you can either take the buy right now because we've already hit that marker, or which I recommend, wait for the safer entry, the confirmation, the crossover. So if you already taken, right, if you had waited for the 10 point or the $1 crossover or the $1 move past your rejection level, you should be in the trade. But for me, right, we're waiting for that green X. Again, I'm not taking the gold one. I just want to mark it up. And we'll see how it goes. But if you do take gold, there's your entry for gold. If you do take gold, at the very least, set maybe break even once you achieve a 1:1 risk to reward, or um, maybe move your stop loss in profit once you achieve the $2 TP. So $2 TP, which would be 1:1 risk to reward, would be somewhere here. That's if you do decide to take it. Again, I am not taking gold. I'm only going to be taking US 30 trades. But yeah, for anybody who wants, that is the markup for gold. Currently, it would be in drawdown, but you just have to just follow through the markup. So anyway, so that would be the trade for gold. Here's the other thing too for this particular one in gold. The candle closed below your SAR level. So here's the other part too, right? When you are trading the candle, remember the idea is that you are expecting the candle to close back above or below your SAR level. So what happened here? The candle that gave us the entry, or the candle that we were trying to trade, closed below our SAR levels. So close below these SAR levels and close below these SAR levels. So this trade, yes, right now you would be at a 1:2 risk to reward. I'm sorry, 1:1 risk to reward. So I do recommend moving stop loss in profit if you've taken this trade. Again, I'm not going to count this as an official trade. I'm only going to be counting the trades that I take. But for gold right now, here's one thing to ask yourself. We've already closed below these SAR levels here. So based off of what I can see on gold, where if gold is to come back down, it's probably going to reject off of this 9 EMA and come back down, because again, we've already closed below these SAR levels that are right here. So can this trade hit a 1:5? Yes, it's possible. But what are the probabilities that it's going to go up first before coming down here? Because we have this heavily bearish candle here that closed below 1, 2, 3 SAR rejection levels. So the question is, what is the probability that gold will push back up? There is that probability, but again, I'm not sure that gold will keep pumping up from here. But if you did take the gold trade, at the very least, you've achieved a 1:1 risk to reward. If you are risking $1,000, you've made $1,000. If you're risking $2,000, you've made $2,000. If you just want to hold it at break even and maybe anticipate to catch the full 1:5 risk to reward, well and good. But for me, I'm waiting for US 30, and honestly, I don't think we will be on the live session for that long for US 30 to come in. Because I have to drop off in 12 minutes. But a lot can happen in 12 minutes. So let's see if we can get a big spike to the downside for US 30. So for gold right now, if your stop loss was at break even, you'd still be in the trade. And yeah. But if I do decide to take the gold trades again, I will be going for maybe 1:2 risk to reward, or yeah, 1:2 risk to reward with break even set at 1:1. I think that's probably better, because for the 1:5 risk to reward on gold, you need some heavy, or not heavy, but you need some nice price action for gold to go in your favor, $10, for some of these trades. And if anybody has any questions, feel free to ask. I think I did go live on YouTube. Hopefully, I didn't forget. But yeah, so right now there's really nothing I see, even for the SAR levels rejection. So maybe later on for gold, there's a buy based off of, oh, yeah. So this one wouldn't be a buy, even though we do get two candles validating this level, because remember, when you're taking the SAR levels rejection strategy, which is the one I use for intraday and swing trading, you don't want to see overlap in supply and demand zone. So you don't want to see overlap. But for the rejection scalps, you don't care about overlap. The reason I'm saying rejection scalps, you don't care about overlaps is because for the rejection scalps, most likely your TP is going to be within that green zone, right? But sometimes for the SAR levels rejection, you normally have a wider TP and stop loss. So if you have an overlap in the supply and demand zones, you normally expect a lot of consolidation in that zone, right? Which can, easily go against you. So it's just that game of probabilities. So even though we do get later on in the day validation for an SAR levels rejection entry at this hourly rejection level, I wouldn't take it if we are still going to have this crossover of the supply and demand zones. So this 4-hour trade would have hit take profit. Again, I was just following this. It just had a bit of a wide TP and stop loss for me, but would have been a pretty nice one if it would have given me a like 300. I was looking at the very least for a 300-point TP and stop loss, because when I was looking to have a 300-point TP and stop loss here, which is my max, the max one that I love for US 30, you can see here we have a bullish order block, right? So I really don't want to see a bullish order block right above where my stop loss would be, because sometimes what happens is that price will come here and then take you out, right? So which is why yesterday I wanted, at the very least, I would have wanted my stop loss to be above that area, above this order block, somewhere there. But you know, this is just one of those times where price did not go back above to that order block. So, it's just a nice thing to note. So there's a possible 4-hour entry on gold. So same thing for this 4-hour entries on gold with this markup right here. This 4-hour rejection levels, they're in no man's land, what I like to call no man's land. So it's neither in supply area, neither in demand area. So again, for this particular one, I wouldn't be looking to take a buy here because I would need this rejection levels to be in a demand zone. That's if I would have taken them. So gold, this trade would have gotten taken out at break even if you didn't take profit. So again, gold for this particular one, unfortunately, trade would have gone to break. And you see what I told you guys? Look at what happened here. What did I mention? I mentioned that we had closure below 1, 2, 3 SAR rejection levels. And then what did I say? I said that they are probably going to take liquidity at the 9 EMA, bring price down. And you can see what happened exactly at the 9 EMA. Unfortunately here, if you're looking to take a rejection at the 9 EMA, I don't think you would have gotten that $1. And I know the EMA is moving constantly. So you wouldn't have gotten that $1 threshold to allow you to sell at the top there. But if you would have anticipated that, right, maybe you would have waited for price to get to the 9 EMA and looked for that sell, which I think came here. So that sell from the 9 EMA came somewhere here, right? So it's upon you guys to decide, do you want to take, right? So there's a bunch of them. So the sell from the 9 EMA, again, now this one would be running. But yeah, I still think gold is going to dip down. But for me, my anticipation was we get an entry for US 30, which unfortunately it doesn't look like we will get. There was a 30-minute entry here. Let's see. I don't think it went $1 away. No, did not satisfy that. All right, so it's 10:24. I have to drop off, but so this rejection scalps, the morning session, the cutoff for the rejection scalps is 11 a.m. Eastern time. So just make a marker at for US 30 at 41,443. If price, what you don't want here, if price before 11 a.m. gets to these rejection levels and pushes back 10 points, go ahead and forget about that rejection scalp. But if US 30 before 11 a.m. Comes past this rejection levels without giving you a retracement and taps at 41,443, that's where I'll be taking my rejection scalp right there. So that would maybe that's going to be the reversal during the day. So currently what might happen for US 30, remember I also take rejection scalps later on in the day between 1:30 p.m. Eastern time and 3 p.m. Eastern time. So this might be the area US 30 will get to during the afternoon session. And remember, the essence of the SAR levels is to kind of give you an area. The message you should receive from SAR levels is that when I get to this area, the probability is that I'm going to reverse to the opposite side. So that is the message you should be getting from the SAR rejection levels. For the order blocks as well, right? The essence is that once price gets to those order blocks, price will maybe go in that specific direction. So other than that, unless anybody has any question, you guys can send any questions to the Discord, any questions that you have. Unfortunately, so today we only had one rejection scalp that came up during market open for US 30, and it was based off of this level right here. But this rejection scalp would have ended up at break even. My trade manager was off, so I wasn't even able to take that trade. But if you would have gone for 1:1 risk to reward, you would have made a profit. If you would have taken 1:5 risk to reward with break even set at 1:1, the trade would have been taken out at break even. But we'll see how tomorrow goes. We'll have let me see if we'll have a live session tomorrow. We will have a live session tomorrow. Yes, we'll have a live session tomorrow. Maybe not Thursday, so maybe tomorrow and Friday. So hopefully we get entries then. I'm considering doing streaming during the afternoon session, maybe 1:30 to 3 p.m. I probably won't be talking, so maybe it will just be a live stream of my chart as I wait to see if there are any rejection scalps, or maybe I can decide to do the live stream. I'll figure it out later. But if there are any questions, feel free to DM me and we can go from there. But other than that, you guys have a good rest of your day.